What is up YouTube, I'm Lamb Trades, and today I'll be taking you through my watch list for the week of April 5th, 2021. Make sure you guys like and subscribe so you never miss content like this. And stay to the end of the video to see what my favorite play for the week is. If you want to stay up to date with my trades and follow along what I'm trading during the week, I'll leave my Discord link in the description where you can join and see exactly what trades I'm looking at every single day. I also do want to invite you guys to leave any stocks you want me to chart or go over in the comments, and I'll be sure to cover it in the next video. We do have a short week this week, which usually leads to a little more volatility in the markets, so prepare for that. But now let's take a look at the economic events that we'll be watching. On Wednesday, we have the pending home sales index. On Thursday, we have initial and continuing jobless claims. And on Friday, even though the market's closed, we are still getting that unemployment rate. Those job numbers this week are very important, especially because the market will be closed on Friday as job numbers are coming out, so we won't really see a reaction until Monday. It's key to pay attention to these numbers, as Powell has said he does not plan on raising rates until we see maximum employment. As we see job numbers go up, even though that is bullish for the markets because it shows that the market is recovering, it is also a hint of bearish because in the future we do know that rates will be rising once we get that maximum employment rate. So I would watch and I would pay attention and just realize that, look, even if the job numbers are creeping up, keep in the back of your mind that does mean that interest rates will rise. Now let's go over what we saw in the markets this week. This week was very volatile. Throughout the entire week, we were held down by this resistance trend line right here, but we're finally able to break out on Friday, then testing it as support and pushing higher. Through that last hour and a half, we really rallied into close, which was very unexpected in my opinion. It serves as a really bullish close going into next week. We saw a lot of uncertainty this week, which I think is the reason for the sell-off midweek. We saw Powell and Yellen talk on Tuesday and Wednesday, and they said the same thing that they have been for months about the economy and reopening. One new thing Powell did speak on is he actually treats Bitcoin as more of a gold than a currency, which I do agree with. Bitcoin didn't like that, but other than that, there was really nothing eventful to come out of their meeting. In my opinion, the sell-off had to do with the uncertainty in the market between inflation, the possibility of rising rates, and the Suez Canal. If you guys don't know, there was a huge boat that is currently blocking the Suez Canal, and the reason why I think this impacted the market is because daily, about 10% of all global trade goes through the Suez Canal, and as crazy as it sounds, the blockage is costing the global economy, give or take, $400 million an hour, and it's been stuck for about 5 days. This has had an effect on the oil markets, as we saw a rally on Tuesday into Wednesday as the ship got stuck. And as crazy as it sounds, I do think the ship affected the markets this week, and the sooner it gets unstuck, the better. This week we also saw the 10 yield decrease. However, the markets didn't really react to the 10 yield movement, which in my opinion is very bullish because we're finally diverging from those yields. Even though the 10 yield decreased, we did see sell-off throughout Tuesday and Wednesday. So as long as the yield is able to chill out, I think we should be good. I am watching for that 1.8 to 2% range on the yield, as if we hit there, I think things could really start to change. But now looking into next week, I do think this run up towards the end of the day on Friday was a little extreme, and I would like for us just to pull back and find some support levels at those previous resistances. If we do gap up into Monday, we should see a pullback before continuing higher. If we don't, I think things could get a little bloody. I do like to see that steady increase rather than a straight jump up. But there is a lot of bullish momentum that is going into next week. So if we are able to find some support, carry up slowly, I do think we could see 400 on the S&P 500. And we've talked about this range. It's a real psychological range. We've ran up a lot this year. So depending on how the market reacts to that $400 range will be very important. But if we're able to hold up, I do think we can see that in the next coming weeks. Now let's take a look at the plays we were watching last week. The first play we were watching was Teladoc. Teladoc continued to fall this week, bottoming out at around $170 a share, which was the bottom of that support range, which is very good. I do think on the technical side of things, Teladoc is a buy. ARK Invest has continued to buy in heavy this week, and if we're able to hold the bottom of the support range, I think we do see a bounce. The next level to watch will be this resistance trend line, and depending on how it reacts, we could see a continuation up to the resistance at 200 and then possibly a continuation up to that 200 SMA. I'll continue to watch, but if it breaks below this 170, I really think the trend is going to continue to the downside. However, I do like the chances of it bouncing from the support range. The next stock we were watching was Boeing. As you can see on Boeing, we weren't able to hold this 250 trendline support, and after that we were pushed below and then held down by this resistance trendline. That changed on Thursday when we were able to push above, use that as support, and continue upwards. However, after that we were then rejected again by this trendline. This is not bullish, and we may fall back down to that 200 SMA on the 4-hour, which sits around $227 a share. So if we're unable to get back above 250, I would expect us to pull back to that 270. And the final play we were watching last week was DraftKings. This was a very shaky week for DraftKings, so I do want to explain it a little bit and really go through it. However, we were watching for a break of this 74 resistance, which we did get, but it really was not strong and it was short-lived. As a result, I actually didn't enter off of that weak breakout, which I'm thankful for, but we then saw a pullback to this support trend line. Now, we bounced off the support trend line and were able to hold going into Tuesday. However, after breaking below, it gave us a great opportunity to play to the downside. We saw about a 15% decrease in DraftKings stock price, which in my opinion is a very big overreaction. However, we do want to be watching for that 200 SMA on the 4-hour this week. As you can see, DraftKings closed just below it. And I think because this was really the only support, as we can see, DraftKings used this as support in the past. I think this was the only support really down until that 56 range. All of this right here, it's really, really choppy. And I want to say they're from 60 to 56, there really isn't much holding DraftKings up. So because of that, I will watch to see if DraftKings is able to push above that $65 level. And if it's not, I do think we'll continue down, especially because we're below that 200 SMA, and that usually indicates that the stock is entering a downtrend. If we're able to bounce off of the support trend line, I think we'll be able to get back above, but I'll be watching that for now. It's a great play to the downside, and it gives us an opportunity to add for the long term. I absolutely love it. But for now, I wouldn't add until we either see a break above 65 or a push below and then bounce off of this $56 level. But I'll keep you guys updated with that. If you guys are still watching, I would really, really appreciate if you could like and subscribe, as I do put a lot of work into these videos. But for now, let's get into the plays that we're watching this week. The first play I'll be watching this week is Walmart. As we can see, Walmart sold off after earnings but was able to recover and formed an ascending triangle on the 4-hour time frame. On Friday, we did use this 135 level as resistance. However, in the last couple of minutes, we were actually able to break through and close above, which in my opinion is very bullish. I would watch for Walmart to retest that 200 SMA. If we're able to get above, I do think we can fill that gap all the way up to 140 to 147. I do really like this play for the upside, and if we do break and get rejected, I would watch if we can hold that 135 as support, and if we can, I think we can retest that 200 SMA and possibly break above. I like Walmart for the long term and the short term play, so any way you want to play it, it's up to you. The next play I'll be watching out for is Facebook. We have covered this resistance trend line before on Facebook and how it has had trouble breaking out for the past couple of months. We finally saw a break this week, and not only that, but we broke out and are now retesting resistance and used it as support on Thursday and Friday. In addition, we also have that MACD about to cross on the 4-hour while we're at a support. I do think this is very, very bullish. It shows that momentum is shifting, and I think it could be a great continuation to the upside on Facebook, so I'll be watching for that this week. And the final and favorite play of this week is BlackBerry. The thing about BlackBerry that I like is we are stuck in this downtrend. However, this downtrend is leading us straight into the support zone from $9 to $10 a share with earnings on Tuesday. I'm watching for BlackBerry to hold this support trend line and break past that $10 a share, maybe even before earnings. However, if we're unable to, as long as we hold the support trend line, I think we can really, really run up into earnings. and then break out after. The reason for this is Q4 is the best quarter of the year for BlackBerry, and they settled a case against Facebook in January. That case settlement was the initial reason for the run-up right here, and then it kind of got carried by GameStop. But that case settlement was really a positive catalyst for BlackBerry. After settling, they were paid out, but never disclosed how much that they received. I think that they will disclose how much they got in this earnings call, and as a result, it'll be great for the company. I am watching for a pop over $10 for a retest of about $12.50 a share. I think BlackBerry is a great investment long term, so I do not mind picking up shares here, but please be careful with holding anything through earnings, as it usually does get a little crazy. I know that is the final play, but there is another play that I really want to watch out for, and that's CHWY. Now, as we can see, CHWY is, you know what, let me bring it up on the 4 hour, it's better to see. As you can see, CHWY has been stuck between the support and resistance for a couple weeks now. With CHWY having earnings on Tuesday, I do think it'll really be the trendsetter to see whether it's going to continue up or down. If we can break above this 88 resistance level, I think we'll continue up. However, if we break below 77, I think we'll enter a downtrend on CHWY, which wouldn't be as good. I'll be watching out to see how they perform on Tuesday and look to play that continuation. If we break above, I think we could continue towards $100 a share possibly, with really there being no resistance in this level. So I'll watch out for that. But that is all for today. I hope you guys are prepared for this week, and if you did watch until the end, please like and subscribe, as I do put a lot of work into these videos. If you want day-by-day updates on my thought about certain plays, or just have a question, feel free to reach out to me in the Discord below. I hope you all enjoyed, and I'll see you in the next one.